Well, after having seen good results from most of the IT companies, Tech Mahindra is also likely to report a good quarter. In fact, quarter Q2 revenue growth in constant currency terms is seen at 1.7% on a sequential basis. This is versus a sharp contraction of 6.3% seen in the last quarter. Dollar revenue is seen at 1242 million, which is a growth of 2.9% on a sequential basis. EBIT margin is seen expanding by nearly around 160 bips QOQ to 11.7%, and EBIT margin would also be one of the key monitorables because there has been volatility in recent times in terms of the EBIT margin, and also this is one of the key reasons why Tech Mahindra derives relatively lower valuation multiples versus its larger peers. In fact, if you look at the profitability, it's likely to be just shy of 1,000 crore. It's seen growing at 2.8% QOQ. We should be seeing EBIT margin expansion led by better utilization, improved cost efficiencies, as well as cross-currency benefits, which are seen to the extent of nearly around 140 bips. Overall, new TCV of deal wins is seen higher than what the company had reported in the last quarter. In the last quarter, new deal wins stood at $290 million, and IDBI Capital expects new TCV of deal wins anywhere around $400 to $500 million. Tech Mahindra has a very high exposure to the communication, telecom, and the manufacturing segment, especially in the communication segment. They have nearly around 40% exposure, and hence management commentary in this segment would be important. The entire commentary in terms of demand trends in this vertical, along with the demand trends in the manufacturing vertical, commentary on 5G related CAPEX would be important. We would also be watching out for information on the new partnership that they had recently struck with Rakuten, where Tech Mahindra is the preferred systems integrated partner. So what would this mean for Tech Mahindra would be also one of the key monitorable. In fact, if you look at the BPO business also, that had faced significant challenges in Q1, and relatively receivable situation is slightly off for Tech Mahindra versus the larger peers, and hence commentary on this aspect would also be important. In fact, if you look at the overall expectations, Edelweiss does believe that they're expecting a 2.3% revenue growth in constant currency terms. This is what Edelweiss is expecting. They also state that they expect Tech Mahindra to post modest margin expansion of nearly around 250 bips QOQ. Do note that Edelweiss expectation of margin expansion is far higher than the street. While Edelweiss expects a margin expansion of 250 bips, the consensus expects the margin expansion of 160 bips QOQ. Edelweiss sees efficient execution and better cost control in terms of aiding the margin expansion, and they also believe that deal momentum, 5G adoption, attrition level, and of course the commentary in terms of the increment and promotion cycle would be fairly important. This stock is in fact trading at 16x FY22 PE. This is relatively far lower than their larger peers. The stock had hit a high of 887 rupees per share on 8th of October, and it has fallen considerably since then on account of profit booking also seen in the sector. Commentary from the management would be fairly important. In the last quarter, CP Gurnani, who's the MD and CEO, had mentioned that we are witnessing a wave of new technologies being adopted by the customers as business across the globe are actively pursuing digital transformation. Any future commentary on this aspect would be very important. Overall, a good quarter is expected from Tech Mahindra.